the stock market will collapse. Will it crash? Will it take a little bit longer? But one thing is for sure is that the wealth in this country will come down dramatically like you wouldn't believe. I have 5 points. I'm not just pulling this out of my rear end. Friends, 5 major points of why the economy in the United States and the global economy at large is going to have a major pullback. It's not a question of if, it's a question of when. And I believe that as I lay these out before you, you'll see that this collapse or crash or financial de-escalation is almost upon us. All right, friends, welcome to the Poplar Report. I'm Steve Poplar. I'm an accountant by trade, and I'm going to be covering on this channel just something that I know people throw out there, stock market crash, this and that, but I'm going to back it up. I promise you. 5 points. Let me give them to you real fast, and then we'll walk through them. Deglobalization. We've been globalizing, and now we're deglobalizing. Depopulation. Yes, friends, I know all your science teachers told that the population in the United States is, and the world is out of control. It's going to just, overwhelm the world's resources and everything like that. That's totally bunk. We're going to hit peak population soon, and the only question is how soon. 3, destructive wars. World War III. I'm going to walk you through some numbers to give you an idea of how destructive World War III might be. 4, deleveraging. There's a lot of juice in the market that is not wealth. It's just borrowed money that people are gambling with. And 5, that leads right into debt. All right, friends, these can all stack on top of each other. Let's jump into deglobalization. For 20 plus years, more than that really, we were moving from isolated country economies to globalized economies, right? It used to be that we had like 100 or 200 different factories making the same kind of thing. Nowadays, some things are produced in one factory in the entire world. Say you have a machine that takes certain parts. Well, there's only one factory in the world that produces those parts. And that's not a unique occurrence. That's actually pretty common nowadays. If you get a car and you want to take it to the shop, you're going to find out real fast that the original manufacturer of that part has stopped producing that part. So how are you going to get that part? Well, you better hope that some Chinese knockoff somewhere in China is knocking those parts out because they think it's worthwhile. But as your car gets more and more rare, they're not going to be doing that anymore. So you show up in the shop and they're like, these parts don't exist anymore. If they can't find a car that they can strip down and take that part off of, you're out of luck. And that is something we've seen across the world. So the simple fact is that we've gone from having hundreds of shops making basically the same thing, and it's basically interchangeable, to one shop in the entire world. That's more efficient. It just is. We can have more specialized parts, and we can have them for a lot cheaper. And yeah, it's bad that we outsourced a whole bunch of American jobs to China and Vietnam and wherever else, but you have to admit the fact that the companies made money off of it. Now we have these companies that are moving their work out of China, and we're starting to see companies diversifying. We're seeing a movement away from globalization towards more localization. So this thing that we did to generate a whole bunch of wealth, which propped up the stock market dramatically and made all these companies tons and tons of money, and the people who invested in them tons and tons of money, as we reverse this, doesn't it not stand to reason that as we move from globalization to localization, that we're going to lose a bunch of money, lose a bunch of value? And the answer to that is absolutely. As we reverse this thing, we're going to get the opposite result, which is it's going to cost more money, companies will make less money, and because of that, the stock market's going to get hit. And it really should, because that just makes sense. 2, depopulation. Well, the United States is basically only growing right now because of all the people coming into our country. Our birth rate inside the United States is just at or slightly below replacement level, which means more people are dying in the United States than are being born to U.S. citizens, except for the new citizens that are cropping up all over the place. It's amazing. Lots and lots of new citizens. All sorts of backdoor ways that that's happening, but that's a whole nother conversation. But the simple fact is that even the UN, who has been crying for decades about, overpopulation of the planet, their projection is that in the year 2080, we will hit a max world population of 10.4 billion people. Even the UN says that population is going to stop going up and it's going to start going down. That should make you kind of wonder about some things. Other projections, which are probably more accurate, say that our population in the world, not just the United States, in the world, is going to peak in 2050 at 9 billion. That's not too much higher than where we are right now. And some of the pessimists out there project that we'll actually hit peak population in 2040 at 8.5 billion. Now, one interesting thing I'm going to point out here is that all of these models do not take into account any kind of major pandemic that really causes mass global die-offs, no major food famines, and they don't take into account this next one, which is World War III. Simple fact is that if you have less people, then the economy doesn't keep growing. I mean, the idea has been that these companies can always market to more people because they can take it into new countries that they've never been into. Well, I mean, these companies have taken their products to basically every country out there around the globe. There's no new markets. They've already gone to all of them. So where's their growth going to come from? Oh, well, the kids. There's so many more people on the planet. Well, in some of these countries, yes. But that's going to start to change. What happens when the market, the global market, is actually in decline? There's less people. Less people means less people buying stuff, which means naturally that you're going to sell less stuff, right? The stock market is assuming that there's always going to be market growth, that these companies that are growing, they're just going to keep on growing forever. But the simple fact is, all the people in the world do not need 2 or 3 iPhones simultaneously, right? There's a limit here of how many iPhones we can sell to the world and other smartphones. And we're going to see these companies, as people start crunching the numbers, like there's just not room for any more people. That's where we are. So as depopulation takes hold, with less people to sell to, why is the market expected to just keep on growing? When there's less money, there's less people, and there's less consumption. That's a fundamentally flawed perspective on things. So I've just given you 2 reasons. Let's move on to number 3. Destructive wars. World War II, as best we can tell, and nobody really knows the answer to this, cost about $14.6 trillion. That's how much damage was done to cities. That was how much work was lost. That's how much money was spent by different countries. The United States spent about $4 trillion on World War II. So I think that this number is actually quite conservative. I mean, how many cities in the United States were flattened? Pull up some things about what happened to Warsaw. Pull up some pictures of what happened to Dresden. Other German cities, other Japanese cities that were completely obliterated. A lot of people don't know why we dropped the nukes on Hiroshima and Nagasaki. The simple fact was that Tokyo was already flattened. There wasn't anything left to bomb in Tokyo. Other major cities inside Japan had already been completely obliterated. The fire bombings of Tokyo destroyed the city and killed a ridiculous amount of people. World War III, how devastating will World War III be? I mean, let's just think about it this way. our little conflicts in Afghanistan, Iraq, all the 9/11 wars. So post 2001, we invaded several countries. Can't even list how many because it's kind of fuzzy and vague. But the 9/11 wars have cost the United States approximately $8 trillion. And these are basically little skirmishes. Now, I know it didn't feel like skirmishes to the people that were involved, and it's not to say that there wasn't intense fighting. But what I'm saying is that the United States, by and large, went along as if nothing was happening. In the continental United States, people just kind of, remember what George Bush said? He said, just go to work and keep going to the store. Okay. That's a war footing right there, isn't it? That's not how it was in World War II. Everybody felt the pinch. And in World War III, I think we're all going to feel the pinch again. And friends, if we all feel the pinch, both the United States, China, other countries, other allied countries, other countries that ally with our enemies, the cost could be staggering. And I tried looking up projections of how much it might cost, how much damage to infrastructure, how much it would cost to fight World War III, and they couldn't even give numbers. The overall wealth in the entire world is about $454 trillion. So a portion of that, gone, destroyed, ships sunk, skyscrapers and cities flattened. Many, many, many people who would have made products and services, their lives extinguished. Destructive wars, or particularly one large destructive war, will absolutely devastate the markets and the financial system around the world. But that's not taken into consideration by anybody. No, things are going to be rosy and peachy forever. When you're buying and selling companies at 30, 40, 50, 100 times earnings, what you're saying is that this company is going to continue making as much money for the next 100 years as it is today. That doesn't make sense at all. What is going to happen in 100 years? Well, there's going to be depopulation. There's definitely going to be deglobalization, and there's definitely going to be wars between now and then, right? Not to mention Jesus may come back along the way too, right? 4, deleveraging. Like I said, there's a lot of juice in the system. It's not real money. I got some real money right here, some silver. This is something real. Imaginary fake dollars that aren't even yours. They were issued by some bank that issued them to another bank, who issued them to another bank, who issued them to you, under the promise that you will at some point give them fake money back. And you've taken that and you've invested that into the stock market. $775 billion of fake juice in the stock market. That's all for selling. If the stocks that people bought with that start dropping, they will go into margin call and they will be forced to sell. Not only the stocks that are going down, but they'll also have to sell them the stocks that they borrowed money to buy. This is why we have crashes. You have flash crashes. Margin calls get happening and banks start selling people's stocks without even their input. That's what happens every single time. $775 billion of fake funny money in the market. I mean, we're supposed to buy low with stocks and sell high, right? I mean, that's basic everything, right? If you want to make money, you need to buy low and sell high. The market is at like all-time highs. And let's just say most of that's concentrated in just a few companies too. There's a few companies that are making buku bucks because everyone pretends like nothing's going to ever happen. NVIDIA is the largest company by far. It's bigger than Amazon, everything like that. They make computer chips. And where do they make computer chips? Taiwan. Could anyone imagine a scenario where the biggest company on the U.S. stock market could run into some problems there? I think we can all maybe figure out maybe a blockade or an invasion of Taiwan might just cause NVIDIA to have some problems with their computer chips. Sure, they're trying to do some stuff to get out of that, but this jet fuel that's pumping into the markets of fake money and these companies that are just priced like it's just ridiculous. I look at the Wall Street bubble and it just stumps me. As an accountant, I just look at it and just, I feel like the people before the 2008 crash is looking at it and going, the numbers don't add up, the numbers are insane, the numbers are stupid, and people just say, well, the numbers were that yesterday, and so they can go up from there today. Well, why should they go up? The situation has gotten worse. Yeah, but stocks always go up. There's more people who want to buy it. Yes, but intrinsically, the value of these companies is going down. Why would the price be going up? Well, because there's lots of free money out there that people want to invest. At some point, there will be a correction and people will lose everything. It's going to be dramatic, friends. You thought the 2008 crash was bad? Well, friends, imagine the 2008 crash, but worse, and then imagine that the Federal Reserve steps in and tries to bail out the market like it did in 2008. But this time it doesn't work. And when it doesn't work, people will lose their minds because they'll realize that the Federal Reserve is a paper tiger that can only print fake money. And on that day, you haven't seen panic yet. Lastly, and most importantly, of course, is debt. We got zombie corporations. I'm not even talking about the federal government's debt. That's just stupid. That's just insanely dumb. When the federal government is borrowing more money than the entire GDP of the country, that's a banana republic. And yet we've already blown past that. I'm not talking about the government debt because we've talked about government debt. Let's talk about corporate debt. We have 7,000 publicly traded companies in the world that are what are called zombie companies. 2,000 publicly traded companies inside the United States that are zombie companies. What's a zombie company? So a zombie company has borrowed money in order to keep operating. But the problem is that in the last 3 years, this is the definition, in the last 3 years, they haven't made enough money to even pay the interest on their loans. In the last 3 years, they haven't made enough money to pay the interest on their loans. So they have to borrow more money in order to pay the interest on their loans and to pay back their loans in order to roll them forward. What happens when the bank just looks at them and goes, why would we loan you money? You're never going to pay us back unless you can get some other stupid bank to loan you money so you can pay us back. At some point, the banks are just going to be like, that's a really bad idea. You're a bad investment. At which point, their interest rates are going to go through the roof, which is going to cause them to implode. When you have a market crash, when you have a market correction, these type of companies get blown out. They disappear. And other companies go in and buy up cannibalize the carcasses, right? That's just the order of how things work. 7,000 publicly traded companies, major corporations in many cases, that can't make money. They can't make enough money to pay their interest. They are waiting to fail. They are bankrupt right now. The only thing keeping them afloat is morons loaning them money. 30% more than a decade ago. The number continues to go up. These companies don't make profitable products that anyone really wants to buy enough to pay for their debt. We are loaded and saddled with these companies. We're talking trillions of dollars. And that's not even talking about the commercial real estate market or the crazy auto loans out there. There's so many different ways we can go with the debt, but we are just up to our eyeballs in debt and well over our head, actually. And the simple fact is, it's all one giant Ponzi scheme. If you have financial assets out there, you know what I recommend? Physical metal. Physical metal, if you have enough food stocked up. Food. Investment on being able to be self-sustaining at your home or someplace that you can get to. And if you have anything left over, then popping it into, personally, I think silver is the way to go. I'm just telling you where I am. I have silver. I get the cheap stuff. These are rounds. They're not even coins. They're really just silver that's been stamped by a company into a 1 ounce thing that looks like a coin. Those are very nice for trading. We got some other options out there that are very attractive too. But friends, the stock market, I'm telling you, I don't think it's a good place to be. The only thing that you should be doing in the stock market is shorting it. That's my personal opinion. That's not investment advice. That's just where I am, and that's me looking at the numbers. That's what I see. All right, friends. Thanks so much for watching. If you want to check out another video from this channel, there's one right up here. I'll see you over there, or I'll see you guys later. Steve Poplar of the Poplar Report.